What do you do about these tech stocks? How much more do they have to go? Or do you want to buy these? And some people think this is like an actual dip, and then some people think this is like the beginning of the end.
Oh, it's absolutely not the beginning of the end. If you look at the total addressable market for all of these companies, it's incredible. Look, Internet of Things is going to be $1 trillion total addressable market by the end of the decade. That's a huge number. Cloud, SaaS cloud, $1 trillion total addressable market by the end of the decade. Wearables in the next 2 years is going to be $55 billion. Retail e-commerce is going to go from $3.9 trillion last year to $6.5 trillion in 3 years. So these are real growth stories. Could we see a continued pullback in these names? Of course. I mean, Apple and Salesforce are still up 49% on the year. NVIDIA up over 100%. Zoom is still up over 400%. So they could see a pullback, but you absolutely want to have exposure to secular technology stories, and you want to barbell it, though, because we are seeing better economic data, and that's going to help the economically sensitive stocks too. And those stocks are actually unloved. They're not up this much in terms of like versus technology. So you do want to have this combination, this diversification. And so I don't think it's the beginning of the end for tech, but I do think that there are opportunities elsewhere.
Okay, so let's talk about the unloved or underloved stocks that you think maybe deserve a little bit of love right now. What's at the top of your list?
Yeah, so, I mean, within the cyclical area, and again, the reason you want to own some of the cyclicals is because the economic data is getting better in housing, in auto, parts of consumer. Manufacturing, Andrew, absolutely has had a V-shaped recovery without a question. If you look at PMIs, ISMs, new orders, et cetera. So I want to own Deere for number one. I mean, it is up 27% on the year, but I think it still has to go. It has a ways to go. They are the ultimate cyclical, right, in terms of ag and farming and tractor sales. They've done a really good job in terms of technology and precision agriculture. I know that's really kind of wonky, but the bottom line is margins have upside, market share has upside. UPS, I like a lot as well because you have logistics, e-commerce play. Business to consumer has been actually very, very strong, as we know, in e-commerce. But business to business has been very weak. So there's your upside. As you open up the economy, you will see an improvement in business to business, and that's very good for their mix and margins.
Let me put
and
a fine
PPG
point
is
on
still
that
down 3% on the year, and that's a housing place.
But let me go back to UPS for a second. You like UPS. Do you like FedEx?
Yeah.
Same space, but you take UPS first.
I mean, I think UPS has an interesting story to it because you have a new CEO, right? You have Carol Tomé, who comes from Home Depot, and they have a ton that they can do in terms of cost cutting. There's a ton of overhead. And in fact, last quarter, they actually posted a 600 basis point improvement in margins, which surprised everybody. So I think there's more upside to UPS because it's kind of a turnaround story within the logistics play. But they're both going to work. And oh, by the way, I own XPO too. And that one also is kind of interesting. So logistics in general is as a theme is one that you actually want to be involved in.
What's your expectation in terms of volatility between now and November? A lot of people obviously talk about the election, but it hasn't really gotten into the ether of the markets yet, one way or the other, I don't think, but maybe I'm wrong.
Well, volatility has come down dramatically since March and April, right? I mean, and I would expect that going into the election, you absolutely would see some volatility. That's kind of natural and normal into the election. But I mean, I just think you want to probably use that volatility to be accumulating blue chip quality companies, right? Like the ones I just mentioned, for example, or maybe if tech pulls back another 10% from here, you're going to get some great opportunities. So I think you embrace it, and I would not be surprised if we see a little bit more volatility. That's fine, but you have to think longer term as an investor, and you want to look for opportunities, just like when we talked back in March and April, you wanted to look for opportunities back then. Quality balance sheets, free cash flow, great management teams, companies that are gaining market share. Those are all the dynamics you want to look for into volatility.